Howdy. Welcome back to Dion Talk. This is going to be a nice short live on my phone where I don't have a chance to answer questions. I will answer questions in the comments below. The purpose of this video is to fix a mistake that I've been making. I want to explain exactly as an investor what I'm doing in 2022 during this current housing crash that we're experiencing in transactions. And what I think a new investor should be doing. And the mistake I've been making, I will explain before this video is over, if I remember. So, as an investor in 2022, here's exactly what I'm doing. No BS, cutting straight to the point. I am hunting for the next great deal. I think this is going to be one of the easiest times to actually find that great deal and identify a motivated seller. In order to find those great deals, here's my strategy that I'm using. If this is your first time to my channel, the purpose of my content is to help the average individual realize that you can reach financial freedom in 10 years or less and make work completely optional, even if you're not starting from the best position. I did this with buy and hold real estate, and I'm continuing to do that, and that's why I want to talk about what I'm doing this year during this housing crash. I have 3 agents with auto searches set up, and I recommend using 3 agents because searching on the MLS is very nuanced, and I've never had my agents, well, not never, one time in 10 years I've had my agents send me the same deal in a 24-hour period. So even if I was an agent and had full access to the MLS, I would have 3 agents with auto searches set up. I'm watching area average rents weekly. And this means in order to calculate my yield, which is what I invest for, I need to know 3 things. Rates, rents, and price. So I check the rents every week by going to places like Facebook Marketplace, Trulia, Redfin, Zillow, Craigslist, Apartments.com, or in the past I would look at Rentometer, but it's very far behind, and I would call the Housing Authority, which hasn't been accurate for a few years. Even they're a little bit light on rents. So I have to know what the area average rents are currently, like this week. So I wouldn't rely on the rents that I expected to see from last month. I want to know what's going on today. Same thing with rates. I talk to the lenders almost weekly to find out exactly where the rates are, because with the Fed changing things, you can't track interest rates for mortgages based on what the Fed does because the banks lend on margin. So based on their level of risk and their fear in the market, their rates might be significantly different than what you're hearing the Fed rate is. But talk to your lenders pretty much once a week and figure out what is the current interest rate in my county that I invest based on my credit score, my debt to income, my work history, all of the things that are factored into your interest rate. Because if you don't know your rates and you don't know your rents, knowing the price is almost irrelevant because you can't calculate your yield. So in the current market, what I'm doing today that is different than what I've done in the past and why I'm confident in my ability to find the next great deal and that each deal after that will be better than the next, is I'm tracking days on market. Learn what the average day on market is in your area, whether it's 2 days, 2 hours, 2 months, and look for properties that are on the market longer than what was normal for your area. In my area, they were bought and sold in a couple of hours. So they were usually pending within a day or 2. So now I'm watching for properties that have been on the MLS for more than 10 days, and now I can make adjustments. This is going to be one of those times where it's easiest for you to get the seller to do things like pay for closing costs, be more willing to make concessions before you close, pay for repairs or fix things. Or, what I'm actually looking for is finding that motivated seller that will actually take a price that makes sense to me, because the price that they list is just the number that mattered to the seller, not the number that matters to me. I want to make an offer that based on rates, rents, and price gets me the yield that I'm looking for in my market. It is that simple. I'm not overthinking it. I'm hoping that you don't overthink it. Whether you've been investing a little more than 10 years like me, whether you're looking for your first rental, I think that's what you should be doing. Watching your market, watching days on market, but being aware of your area average rents, what your current interest rates are, because they change often, and what the home prices are. And remember that prices that we're seeing right now are wish prices. Sellers are putting up properties for sale that they think, if I get this price, it would be totally worth selling. And then watch days on market so that you can figure out if that seller is more likely to take an offer from you that makes sense to your yield. And I'm not going to answer questions, but I will address that. The comment that just came up. 1% of the population. Yeah, probably less than that actually watch this channel. But the first-time homebuyer right now has 0 down payment loans. Places like California are doing a 10% down payment that will be forgiven if you live in the property for more than 5 years. So with things like a 3% down conventional loan, first-time owner-occupied, that's actually who's going to be the person who has the power going forward for the next year. Investors are backing off. Demand has been killed by interest rates. This is the time to buy. If you're watching the channels that say wait for the crash or wait for the correction, here's why that's a mistake. The thing that's going to cause the crash or the correction is higher interest rates. So think about this. You want the price to come down because the interest rates went up. So congratulations, you're going to spend more money. You're just going to give more of it to the lender than to the seller. People have been calling for a crash for years. Now here was the mistake in this video. And what I think I'm hoping that I've corrected. People don't make comments like that on my videos when I start with an explanation. Here's why we had a seller's market for the last 2 years. And then I take 5 minutes to explain it. And then I explain for 3 minutes why we've switched to a buyer's market and why this is the time to be investing. Doing it that way took about 8 minutes for me to explain, don't jump, took about 8 minutes for me to explain how the market has shifted. And then I explained what I was doing. And I think the problem was people got to about the 8-minute mark and they either stopped watching, because I'm kind of boring, I get it, or I got a voice that irritates them, I understand, or you don't like the backdrop. Because eventually the backdrop should be these slides that I'm going to go down, depending on whether the kids beat me up or not. Kids are scary, little demons. So, why is my YouTube live stopping? Hopefully we're still live. My internet connection is wobbly. That's awesome. Let me know if we're still live. So my mistake was I was taking a long time to explain what's changed in the market and why I've shifted my investing strategy. And by the time I got around to explaining what I did, I'd lost the crowd. So in this video, I'm hoping that I corrected that by, in the first few minutes, just cutting straight to the chase and saying, here is exactly what I'm doing as an investor and what I suggest that you do. I have videos on my channel on how to get started investing in real estate. And no, it doesn't take a lot of money. And no, it doesn't take hundreds of units to reach financial freedom. It only took 7 units for me to reach financial freedom and make work optional. I'm at 16 now, and my passive income is about 5 times what it costs me to live. And I believe I'm going to be quitting my job within the next 3 years, or maybe tomorrow, somewhere in between that timeline. My goal is to find people who watch content like this that are looking to do the same thing. And when we talk about things like this, we're going to find people who look for fear content. And they say things like, I can't invest. This isn't the time to invest. Wait for the crash. Look for all of the reasons to not take action. There are a lot of channels and a lot of content creators that get a lot of views because they feed into that person's ability to not take action. I'm trying not to talk to those people. I'm looking for the people, like the people I've interviewed on my channel or met at the meetups, that are actually taking action, closing on deals now, creating passive income, adding one rental at a time, and each cash flowing asset that you add to your portfolio is going to make it easier to acquire the next one. And yes, the first one is the hardest. Kids are scary, waiting for them to leave. So I'm hoping that with this live stream, I've cleared that up a bit and explained exactly as an investor in 2022 what I'm doing differently. I can't be the only adult that comes down here and goes down the slides, can I? Probably the only sober one here today, though. I need to fix that. Until my next video, remember these words. You are going to be alive in 5 years. You should start investing like it. Until my next video, thanks for coming to my Dion Talk.